People always say that you have to have money to make money, and that there's an extraordinary level of sacrifice on the road to success. So how is it that investors like us, who didn't start out with much money and who don't rely on banks and credit, how is it that we can increase our income and build our wealth in a way that doesn't require us replacing one full-time job with another while still enjoying...
Hey guys, so I wanted to stop the intro right at that point because we have had that intro for a few years, right? Since the beginning.
Yeah, hey guys, it's been a while.
What's going on? It's been a while, and I wanted to call a little BS.
You can swear.
I can swear. I'm calling bullshit.
We're allowed to swear.
On that statement, trading one job for another.
Well, first off, welcome back. It's been a while.
Absolutely.
I don't remember the last time we recorded a show, but it's been quite some time. So a lot has transpired since then. And I think we were in the middle of the renovation with the big office building, and you were still getting your pilot's license, which you still are.
It's going on
and we do still have that office building, but it's all fully rented, and now we're moving on to bigger projects.
Yeah.
So a lot has gone down since the last time that we were on, and we have both gotten exponentially busier.
Yeah.
Which is one of the reasons why we honestly, candidly, stop recording.
Right, because we did trade one job for many others.
We really did. Yeah, we really did.
And the BS that I'm calling is that this notion that we invest in something that's going to improve our lives, right? These asset classes. There are asset classes. There are only 4 asset classes out there, and everything else is a derivative of that. So you've got cash, you've got owning your own business, you've got the stock market, right? The open trading market, and then you have real estate. Those are the only 4 asset classes there are out there. And so and not coincidentally, these track to Robert Kiyosaki's quadrant, right? Which we'll probably talk a little bit about because it provides a great framework for the conversation that a lot of people can relate to. And so these classes, these education programs that have come out and become more and more popular as our society has evolved over, I would say over the last decade, maybe dozen years, where the thinking around the industrial age, go to school, get a good job, or you get a good education, right? And then get a good job and then retire at 40 years with the gold watch like your father did. That notion's been going away very, very quickly, especially, and really, really accelerated over the last 10, 15 years, right? And with that has come what I call private education, right? Which we've been a part of. And private education is basically where we invest in specific things that we want to accomplish so that we can improve our lives. And when we make these investments, we make them in one of these 4 asset classes. Learn real estate and retire early, right? The 4-hour work week. All of these things are all geared towards, making money. And it's usually in either real estate or somewhere in the stock market. Okay. And then kind of hovering over that is owning your own business, right? Because when you run a real estate operation, whether you're a small mom and pop or whether you have a larger organization and a brokerage and all that kind of stuff, that is owning your own business. Or if you're in the market and you can just be an individual trader, or you can build that up to be a business, or you can have a business that does things like builds widgets and provides services and all of that kind of stuff. So when these things come up on the internet and when you get the clickbait out there, it's all about invest in this, give me your money, I'm going to teach you how to do this, and before too long you're going to be on yachts, walking around on yachts in white beautiful tops.
Well, listen, let's be honest, let's give ourselves a little credit here.
Yeah.
Real estate and our businesses have given us the flexibility that we were looking for. Yes. So we don't clock in and out. We don't have to take paid time off. We don't have to check in with the boss and, take sick days. We have the flexibility to do that, and I also don't remember ever a time where we went on vacation and we didn't bring our laptops and we weren't working. So there's a difference here between, you want the flexibility, but you also want to be able to turn it off and over the last 5 to 6 years, I can't remember a time where we actually were able to turn things off and actually like have that quality time, personal time. And that's what we mean when like we have traded one job for another. Yes, it gives us a ton of flexibility. Yes, we make way more money doing it. But, you know, we are total operators in the business. We are not owners of that business, meaning we are just operating on a daily basis. We are the operator. And if we are not operating in the business, then there is no business. I mean, that is like the biggest difference, right? And so why don't we go ahead and introduce Stephen, because that is like the whole premise of what we want to do now is like, how do we get our business from operating in it to actually owning it? And our good friend, Stephen Crawford, who I will have you introduce.
Why don't you introduce him? Because you met him first and he's become a big part of our life. And
okay, well, first off, welcome to the show, Stephen. We're so excited to have you.
Thank you so much. And if you don't know, I'm blushing. See, it's hard for people to see me blushing. I'm blushing right now.
This is Stephen blushing. Gosh, Stephen and I met a few months ago in a very deep way, right? And we won't go into the details of that, but him and I really met each other in a very, very deep way. And it really wasn't around business. It was more, you know, personal, spiritual. And that during that time, we were having some challenges in our business. And he was like, you know, this is what I do for a living. Why don't I help you? And so, you know, I introduced Stephen to Howie, and then we ended up forming not only a really close personal relationship with Stephen, but a business relationship with Stephen. And Stephen is, I'm just gonna make you blush a little bit more. Stephen is a genius at what he does. And I got to see this the very first night I met him, where he could look at someone, their mannerisms, the way that they said things, the things that they said, and he could totally break down some of the fundamental issues that they were struggling with. And I remember when he did this, the individual that he was talking to, the individual just looked at him and was like, wow. And I looked at Stephen and I was like, wow, where do you get this gift? So this is why we are going to be bringing Stephen on as part of the show, because Stephen is now going to be helping us to get out of that operator mode and into the owner mode. And we want you all to be a part of that journey, because that's just going to help everyone, right?
All right. I'm just going to say that all of you should have a Howie and Carrie in your life that makes you blush like this. And when the cheekbones go up, I think there's going to be this permanent smile on my face all day. So thank you so much. You guys know I love you so much. And so it's just so great. And as they've said, listen, we've been able to develop this powerful personal relationship. And with any of your, if you know any of your friends, you see them struggling with anything, one of the things you want to make sure is if you see the path to help them get out, you want to help them get out. And I think as Howie mentioned already, you see the asset classes of what all of us deal with and what we have to operate with. And I will say this, though, there are two people that he talked about, which is the real estate investor and the stock market investor, who literally become an investor in their business from day one. And that's all they ever want to do. And if that is you and you don't want to build a business that works without you, there is nothing wrong with that. But just know when you go away, your business goes away. And that, and if that's the way you want it, and that's the way you want to live your life, it is totally okay. But I know from personal experience that Howie and Carrie want the business to run, and they want cash to flow in while they're sleeping, while they're dreaming, while they're on an island somewhere, and they don't want to have to touch a computer. And they don't. And so if that's you, that's what this conversation really centers around, right?
Absolutely.
Yeah. And we talk about this with like owning real estate with long-term holds and rentals, is that you have cash flow coming in, but let's be serious, guys. In order to get that rental, you have to acquire it. You have to get the loans. You got to do the due diligence. You got to go do the closing. A lot of times those houses and those buildings need renovation. Then you got to get the tenants in. Then the cash flow comes, but it's still not completely passive, because now you've got to manage it and you've got to reproduce it. So this is how we have fallen into total operator mode, because yes, we have passive income coming in, but is it really passive?
Right. And I think that also, to add to that, there is a cycle that goes on. And I think that like one of the things that I've really become present to, because we've been doing this for so many years now, is the concept of reloading. So I'll just take 1 second and just kind of dive into the real estate world of this right now, is that properties have to get reloaded. You know, they don't just sit there forever. You know, yes, you have management and, you know, repairs, and depending on what kind of asset it is, whether it's a, you know, multifamily or a single family or office or retail or whatever. Yeah, you got the things that you have to deal with along the way. And, you know, even if you hire a management company, you got to manage the management company,
Right.
and in all those things. But what, you know, this stuff doesn't sit forever.
Right.
And it's got to reload. You know, you've got deferred maintenance issues. You've got financing issues that are turning. In fact, we're going into a big season of that right now, where we got some big financial issues that are turning for a lot of people out there. And we'll be talking about that as we go forward here in the next few months. But you got to reload. And so you have different properties that you're acquiring. You're at different stages with those different properties, with all the stages that you just talked about. And then you also have the life cycles of the property. And so it never ends, right? Like you just are not sitting on the island. And I don't think just sitting on the island in our swim clothes is really the objective. I think the objective is for God's sakes, can I like go take a day or two off without something going wrong?
Or just owning, like real estate investing is just like, it's a business, right? Just like any business. Like we own more than one business. We don't just own real estate businesses. And Stephen, you coach people in all different industries. Like I love hearing all of the different people that you work with, from medical practitioners to real estate investors to IT consulting firms. Like it's not really about real estate. It's about the business structure. And so that's why we're bringing you on here.
Yeah, absolutely. And one thing I just want to allude to, how we mentioned, yes, it is the cycles, but it's also this disruptors that are unpredictable. It is like, you know, no one predicted what was going to happen with commercial real estate when COVID happened. No one predicted that. That's not even part of the natural cycle. And all owners had to jump in, both hands in, and go deep. And I know that the companies, we've had the privilege of working with over 400 companies in the last dozen years. And we have a small and mighty team of coaches and consultants that really get in, we dig in, and we look for ways in order to maximize the opportunity that each business has to really live the life of their dreams. And so, like I said, I have worked with real estate investors, and all they want to do is do it, and they want to be able to get done, make a lot of money, and get out. And they don't want their name on anything. They just want to get in, get out. And that's what they want to do. And we help them make a lot of money doing that. So we focus on only part of the business. The part of the business is going to really increase and enhance cash flow to get them to the point of their goals and dreams. So if you're listening to this and you're a business owner, you're in control. You know, this is all about choice. You get to control what you want out of your business. And that's really what it fundamentally boils down to. What do you want? And I can tell you, in my 20s, I didn't give a crap whether, anything lasted. Just make me some money. And then in my 30s, which many people think I still am, so I'm just going to stop there.
It says high cheekbones.
So I start to think a little bit more long term, like, all right, listen, I am tired. You know, if you've been doing something for 15, 16, 17 years, you get exhausted needing to start over again. He says, yay, we finish. And that dopamine high hits you and you're excited. And it's like, now we have to start all over again. And it just becomes this grind. And I think when you get to certain seasons in life, it really becomes more important that we put things in place, especially as entrepreneurs and business owners, that allows the business to work without us. It needs to be a business that can work without us. And what that means and what that looks like is really what I think we have the privilege of tapping into.
Yeah. And so tell us, like, how did this get started for you? Like, we want to know your Superman origin story.
Yeah, I know. Well, see, so I just want to be clear. I am a nonprofit guy. I grew up in the inner city of Chicago. And if those of you know Chicago, 7400 South Maryland is a block off of Cottage Grove. So when I say Inglewood, Chicago, no one that's from there thinks, oh my gosh, you were so privileged.
Like, poor guy.
I know, right? So, we grew up in a house that my grandfather built. We were told as kids that the gunshots were firecrackers. The police station that was on the end of our block moved out. because it was too dangerous. It was
That sounds
it's seriously, and that's a true story. And they literally shut it down. They said we'll move a few blocks away where it's a little safer, because they were constantly getting things happening in that police station, especially when people were on hold, under.
Mhm.
Staying overnight. And so I grew up in a pretty rough environment. So urban has always been at my heart. And I really wanted to, when I went to college and really got out and really began to look at the world, I did my undergraduate in urban studies, because I really believe that if we can change systems, as Carrie mentioned, my mind works with systems. And I said, if we can change systems, if we can really build a system that makes things work. So my question that drove me was, how do we make things work for people that is going to make people's lives better? And so I worked in the nonprofit world. We had this huge multi-billion-dollar pharmaceutical company that was investing in a nonprofit to help us do leadership training and development and missional work throughout the nonprofit world. And unfortunately, in 2008, their stock rippled and they reprioritized. For those who don't know what that means, they were done giving us money.
Worse than what it actually sounds like.
So they were giving us millions of dollars, and all of a sudden it just shut up. And I was the director at the time, and so I remember being down in Indiana University, was where this endowment really gives, and they were just crying and just celebrating all the stories. And then he says, "But we're done." And I said, "Yay!" And so it was at that point I said, "You know what? We have something special here." And I had been going around talking to large businesses, and through committees and bureaucrats and red tape, it took forever to get a word back on whether they would actually contribute towards this. But I would sit across from an entrepreneur, someone who was running their own business. You know, they had started with nothing, a toolbox and a hard hat, and they had built a $10-20 million construction company. And if their heart was touched by our mission, they didn't ask anybody. They literally grabbed their checkbook and wrote us a check. I said, I like that. And I realized as I talk with entrepreneurs, some wrote big checks and some wrote small checks. I realized that the people that wrote small checks, it wasn't because their heart wasn't bigger. It's because they weren't successful enough. And I said, what if we apply some of these same leadership tools to these businesses, and we help them grow to the point where they can give whatever they wanted to give? And so between 2008 and 2011, I did that, working side by side with the nonprofit, and started doing consulting, and we started seeing some massive growth. Then in 2011, when we officially ran out of money, you know, we had 60 employees. We kind of had to reduce in size, and it was two of us left. Me and this guy named Tuffy, who was our fund developer, may he rest in peace. He was 75 years old and still out there swinging with me every day, you know, trying to raise money. And he was Tuffy for a reason. He was real tough. Guy. It was just what we kind of just looked at each other and says, all right, well, we're the last two standing, and we'll give this one more go. And when we couldn't raise the funds, I just started doing full time. As they said, when the board closes down, they just promote you to customer. You know, it's the high. So I was promoted to customer, and the board shut down the 501c3, and we decided to just move on from there and do this full time. And because I had already started with some momentum and making some companies successful, my reputation was growing. So they were referring me to people. And my beginning was starting with the E-Myth. But since then, between Action Coach, EOS, and over 43 different things, I'm an avid learner. So I've been glutton for punishment. So we've invested well over $1 million in post academic education, and trying to get licenses and certifications to make sure that every part of the business has support and is covered. And what we discovered along the way is there's probably 4 of the 43 licenses that are actually essential for what it is that we do. So if you're a coach or a consultant out there, just DM me, message me. I will tell you what to stay away from and what to go with, because we have wasted a lot of money and a lot of hours in courses and classes traveling all over the country. But we figured out a way, and we figured out there if we would actually spend time in 6 areas, we could literally transform a business from being an owner operator. And Howie's already mentioned before, there are 4 different positions in a company that Robert Kiyosaki points out. The first is an employee, and that employee's job is to gain revenue. And what I challenge people to think about is their ability to gain revenue should be a 4-to-1 ratio. So if you're paying them $30,000, you should be able to to tie their effort and their energies back to $120,000 worth of revenue.
Mm.
So there should be a 4-to-1 ratio. And then you have another position, which is the manager. The manager I see as a person whose job is to make sure there's profit. It doesn't matter how much revenue you bring in. If you bring in $1 million and you spend $999,000 to get it, that's not a good business, and your business isn't worth much. So the manager's job is to ensure profit. And I believe the manager's job should be a 10-to-1 ratio of revenue. And then you have the owner. This is the one who makes sure that you've got lines of credit, you've got cash, your seasonality of the business is all covered because you're managing the cash flow.
Yeah.
To ensure it's going to work. And finally, where we want every business owner to get to is the final, and that is the investor. It's when you contribute money and direction. But someone else is making sure there's cash flow. So you don't have to worry about it. You don't have to sweat it when you're on vacation. Someone else is managing to make sure there's profit. And you've got a group of employees are out there making sure that they're banging the walls every day to make sure revenue is coming in. And that's from receptionists to VA to anybody that you employ is making sure revenue is coming in. So that's kind of the structure that we look at. And there are 6 secrets that if we can do, we can get someone. Most business owners, unfortunately, are also employees.
Yeah. Yeah.
Well, when you say that, do you mean employees of their own business or employees of?
No, they are driving. If they stop driving, revenue doesn't come in.
Right. So they're basically filling the employee role, the manager role, and the owner role.
Yep.
100%.
So that's the that's basically the glorified S in the Kiyosaki quadrant, which is the self-employed.
You're self-employed. Yay!
Superstar. S stands for self-employed. S stands for superstar.
Right.
Yeah.
But what I want to know is,
in my case, S stands for getting your ass kicked.
What I want to know is these. Okay, so what are these 6 secrets?
Well, let me interject here, since I talked about getting my butt whooped, and I think we can run right through it, and then we'll have a break. So there'll be 2 here, and so quick journey, quick kind of recap.
Yeah.
And some of you that have been with us before have heard bits and pieces of this, but I'll recap this in just like 60 seconds. So Carrie and I got started in our business a dozen years ago, give or take some months. And we've had these different maturations of success. We manifested a lot in the beginning, and we grew kind of hockey stick curve with the real estate business mostly. And a lot of you know also that I also run a small IT consulting practice as an S, superstar, self-employed, getting my butt kicked guy.
You know what's interesting about this is we are I'm in the process of like purging stuff from our house, and I found all of these old rolled up poster boards from like Tony Robbins, and these are from like 10 years ago. And so, and they're like journal entries. And so I was reading, and there was this like manifestation letter that, I sent to myself. And this was probably 10 years ago that I wrote the letter to myself, and everything in that letter has come to fruition, except that we wanted to be traveling the world during the summer with our business running. Which is isn't that interesting?
Yeah, which is a perfect.
Yeah, it's like the one thing that we have not really been able to accomplish, and it was so interesting reading my letters from 10 years ago. I didn't realize that.
Let's talk about why, because it really is exactly what I'm talking about. Because we run into, I keep calling it the glass ceiling. So this is my glass ceiling as opposed to the original, the corporate glass ceiling, right? This is the entrepreneur glass ceiling.
Yeah.
Where we have attempted to make investments in our business so that we could get out of it, not have to be in it day in and day out.
Yep.
And we just hit a ceiling, right? And then we retracted, tried something new, and then we hit a ceiling. And then we retracted, tried something new, and hit a ceiling. And this has been going on for the better part of a decade. Too much frustration. And it's not to say that we haven't had a ton of success in a lot of different areas, because, business is complex. Our lives are complex.
No, the glass ceiling keeps getting higher, but with it comes more work that needs to go into it.
I can say that right now in November of 2023, have you ever seen me work like this?
No.
Ever? Ever? Never.
Yeah.
And I always thought, I couldn't work any harder than this. I am absolutely balls to the wall. I can't even see how I could spend another minute in effort, because I am just, now granted, I'm running 2 companies.
Yeah.
I'm operating 2 companies. And
Yeah.
so that is the crux of the problem. It wouldn't be quite as bad if I was
And I'm
only doing 1 or 2.
consulting with the 2 companies.
Yeah, and they both have their kind of peaks and valleys of demand, and
Mhm.
sometimes they peak at the same time, and that's when it really, really gets
Yep.
rough. And I'm really in kind of a lot of pain right now because of some things that are peaking and some demands that are coming in and some crises
Yeah.
that are arising. And I'm the guy, right? Like I'm the guy that's got to get it done. And so enter Stephen.
Yeah.
And we're just starting our journey together, and Stephen and I are going to try to do something about this, right, over the next year or so.
You all get to be
and you guys get to be part of this,
journey.
right? So Stephen's welcome. And this is a beautiful time to say, okay, Stephen. So
No pressure, Stephen. You're
Unfelt, because I've seen it play out over 400 times.
Hey, Investor Warriors, thank you for listening to today's episode. If you got something out of this episode or you love our show, remember to subscribe, leave us a 5-star review, and share this out to your friends and family. And here's what I want you to do. If you review us or if you share this podcast to your network, I want you to take a picture, a screenshot picture of that review or of that share, and I want you to send that picture to my email, which is Carrie, spelled Kari, Carrie@theinvestorwarrior.com, because every single week we're going to run a contest. So you will be entered into that contest if you leave a review or if you share the podcast out to someone. And we're going to be giving away all kinds of cool stuff like books from our guests. We're going to be giving away free coaching sessions, virtual lunches where I buy you lunch, we get on a Zoom call together, and we talk real estate. So if you want to enter into the contest, remember, leave us a review or share this podcast to your friends and family. Take a screenshot, email it to Carrie@theinvestorwarrior.com, and you will be entered into the contest. And you can do this week after week if you want. Just keep on sharing. All right, thanks guys. We'll see you on the next episode. And remember, you are only one deal away.
And by the way, as the lawyers want me to say, everything said on this podcast is my opinion or the opinions of my guests, and is not to be taken as investment advice, because I am not your investment advisor. So this podcast is just for your education and entertainment only. And I hope you enjoyed it. See you next time.